We've got the NSE 20 hovering around that 4,000 point mark. What are you making of current market activity?
I believe the next coming days, the market is actually going to, oscillate between 3,500 and 4,000. This is in line with the three key factors which you've already mentioned. One is the aspect of inflation, which unfortunately the government and the relevant stakeholders have been actually unable to actually mitigate. To the political uncertainty, and this comes into two aspects, because one of the process that's happening at The Hague, which actually involves senior government officials, especially the Minister of Finance, and also on the political front at home in terms of Parliament's slow process of implementing the new constitution, which is actually supposed to guide us on how to actually reboost the economy. But also again, the Ministry of Finance decision actually not to fully implement the stimulus package, because now the money is needed for something else in terms of implementing the new constitution. So you realize that the plans that had been set in place to actually jumpstart our economy have actually stalled. And now we are all wondering what's going to happen to the macroeconomic indicators. But also again, when you're looking at the aspect of the weakening shilling, it's actually been unable to rise strongly against the dollar, and lack of liberalization in the industry or independence, whereby at any given time when the shilling actually weakens against the dollar, central bank is actually called in to to mitigate that. So these are the three key factors that are going to make the market oscillate in between. But also foreign investors are going to shy away, because they're going to hold back onto investment, trying to figure out what's actually going to happen and what will happen to the country in terms of peace, in terms of political stability, as far as The Hague and the local process is concerned.
In that macro context, we've had news out of East African breweries saying that it's planning to increase beer prices to cushion its margins against rising costs. What are you making of that move? Because while that could potentially spell good news for the bottom line moving forward, it also places significant pressure in terms of getting the volume and sales volumes up moving forward in an already distressed consumer market.
I believe EABL's given reasons why they want to increase the beer prices of select brands between 5 shillings, 10 shillings is not true, because I believe the real reason is a new law that was actually introduced towards the end of last year, which reduces the number of hours that establishments can operate, and also liberalizes the illicit brew production. So basically, you're seeing that there's a lot of competition for it from the traditional beer makers, and over 13% reduction in consumption of its products and services at the end of the day, because I don't believe a rise in cost production is an issue to this. But also this is a beacon for any other competitor who's going to come into the market, because I believe it's all about ingenuity, it's all about strategy to try and work around the law, because I don't think the law is going to be to go anywhere. It was suspended briefly, but the High Court ruled against its suspension, so the law is actually going to be fully implemented, and I think the relevant agencies are working on it. So I think beer makers and other industry players should actually look at a way of working around the law. But it's not about the aspect of increased cost production or anything else, but just because of what the law, because it's actually mitigating the aspect of growth. So what you're seeing is the industry has reached a plateau whereby there are no growth sales, and what EABL is trying to do is to reboost its bottom line and increase its quarter profits, because I believe the last quarter results will be very dismal for it.
What do you see these higher prices actually doing to consumption volumes, where they've already remained flat as a result of those new alcohol laws?
I think it's a wrong strategy for East African breweries, and I think it's giving an impetus to other players in the industry, and especially those who've been licensed to produce alcohol from a traditional point of view, because now everyone is actually going to look at alternatives, because at the end of the day, I don't think I want to spend more money than already been spending for entertainment and for leisure drinking on weekends. So I'm going to look for cheap alternatives. So their strategy is wrong. It's actually going to deepen to worsen the bottom line at the end of the day, and they're going to drive away their customers, and it will give Sub Miller the needed indication that this is the right market to actually get in and be a good competitor.
Talking about company strategy, KCB is eyeing the bond market to boost its mortgage lending and considering a return to the capital markets to raise long-term funding to actually finance that mortgage business moving forward. What are you making of that move?
For a long time, the real estate industry has never really had a direction, but it's actually picking up. And with the new constitution and new demand for buildings, both residential, commercial, the housing industry is actually the place to be. However, the strategy for Kenya Commercial Bank is a bit wary, and it's making a lot of investors hold back and figure out what's the direction, because it's not so long ago there were the capital markets to raise funds for the expansion into the region. Now they want to go back and do the same thing for the mortgage division, which I don't think is the right place to be, because at the end of the day, we're seeing that the leading company in this sector, housing finance, has been able to do that for a while. So I think KCB needs to come up with a different strategy, or actually look at syndicated loans or partners to actually develop this, or come up with a way to work with the government or other private sector players, other than going to the bond market, because at the end of the day, the bond market is actually going to be tricky. It's going to be very fluid, with a lot of investors holding back because of the political uncertainty of the country.
In that context, we've got lending rates on the rise amidst tight liquidity, and of course this where we've had the CBK try and exert pressure on the local banks to drop their lending rates in tandem with that of the central banks. Just how much strain do you see this putting on banks moving forward, where there may not be a market that will, that's actually there for credit moving forward?
One, I believe central bank needs to hold off a bit in terms of interfering with the dynamics of our day-to-day trading in the finance industry, because at the end of the day, the industry needs independence. But what's happening is with the tight liquidity and banks borrowing from each other becoming very expensive, there is no way the lending rates are actually going to go down, but they're actually going to go up. And as long as central bank will keep interfering, the market will not be free. And I believe a lot needs to be done. The monetary policy of the country needs to be relooked at. We need to look at the macroeconomic indicators. We need to look at all the factors that actually, because our market at the end of the day is actually driven by sentiment and not really fundamental issues. When you sit back and actually analyze the issues, for example, from liquidity issues to forex trading and the aspect of lending, either between banks and the clients or between banks themselves and central bank, the issues are all sentimental, and the fundamental factors don't really have a key issue. And you're realizing that our banks actually are going to increase the lending rates to be able to make business. At the end of the day, they'll want to hedge against the profits going down.